What if I told you the biggest threat to your portfolio in 2025 isn't interest rates, it's not inflation, and it's not anything really that's going on in the market, but it's really about the decisions that you're making right now in your portfolio. In this video, I'm going to be breaking down the 5 biggest mistakes that investors are making in 2025, and more importantly, how you can avoid them. So you can stay ahead of the market and also avoid becoming an example of what not to do. The market has changed dramatically recently, but most investors haven't. They're still doing the same old things. So stick around to the end because number 5 might just be the most expensive of all. Welcome back to the channel. Now, before I jump into the top 5 mistakes that we're going to be going through today, I just want to let you know, if you're new to the channel, this Flex Free Game channel is all about helping people with getting free information on the market so that you can be successful, whether you're investing, trading, or anything else that you want to do. We're all about helping people with building wealth. So we'll go ahead and jump right in. The first mistake that people are making is chasing AI stocks without understanding them. So we can start with the obvious. There is an AI mania going on in the market. We've seen it driving the market. We keep hearing news about all the different AI stocks, AI companies. So everywhere you look, people are talking about it. NVIDIA, Palantir, OpenAI partnerships, you name it, everything that is going on with AI is always in the news. But the problem is most investors today are buying the stories and not the business. So they're chasing the tickets that they see on social media, everybody talking about what's going on with these companies without ever actually reading a financial statement. So some of these AI stocks are trading at 40 times their sales, not earnings, their actual sales. So that's a massive red flag when you're looking at the market. And history tells us what happens when hype outruns the reality, right? When it outruns reality, the valuations collapse and these stocks really take a dive. So here's how you can fix it. Instead of trying to find the next NVIDIA, you want to focus on companies that are powering the AI revolution. So the ones that are building the chips, the ones that are building the servers, the ones that are building the data centers, because those businesses are going to be sustainable and they're going to have the ability to grow behind the scenes with all the noise and everything going on in the media. So stick to those. Try to find some companies that have a great earnings and have shown the ability to actually generate revenue and that are powering the revolution. Like I said, they're building the chips, they're building the servers, they're building the data centers, they're providing the things that are needed for this AI boom. So those are the things you want to pay attention to when it comes to AI and really avoid the noise. All right, so mistake number 2, we want to avoid ignoring cash bonds, right? So after years of zero interest rates, investors forgot one simple truth, and that cash has value again. So we're seeing, cash having value. You can actually start making money by having it in cash. And many people have 100% of their portfolios in stocks, even though treasury bills are paying up to 5%. So I think that's a mistake. There's money to be made here, and it's going to be a little bit more secure, so you're not putting everything that you have at risk. So cash also gives you flexibility. It's not always about just timing the market, right? It's about having cash on hand so you're ready when opportunities arise and when things go on sale. We talk about that all the time. The market doesn't go up in a straight line. There's always going to be volatility, and things, really great companies do dip and they go on sale, and there's times to buy, and you want to have cash on hand so you can take advantage of that. So smart investors in 2025 are earning yield on the sidelines, short-term treasuries, money market funds, and even high yield savings accounts. These are all different ways that you can keep money in cash and actually earn some income on that. And you can earn without the volatility, right? Again, I talked about the market not always going up, in a straight line, having that volatility. When you have this cash on the sideline and they're in something that's going to provide this yield, it's a great way to kind of earn some money and keep your money safe at the same time and keep it available for opportunities. Mistake number 3, overreacting to headlines. Now, let's be honest, we've all done this. I'm guilty of this myself, but we want to make sure we're getting better at this as we go. You see a scary headline, recession fears, Fed shock, geopolitical risk, and suddenly you're thinking about selling everything, right? You want to hit that button, just let everything go. But we want to make sure that we're not doing that And the truth is, long-term investors don't react to the news, right? They react with their plan. And if you're a good investor, you've had a plan, you know why you're investing, you know what you're investing in, you've done the research, and that market success is going to come from consistency and not panicking. And Warren Buffett once said, the stock market is a device for transferring money from the inpatient to the patient. And in 2025, patience is going to be your competitive edge. So if you're able to stick to your plan, have a plan, and be able to kind of be patient, this is going to help you out. Some things that you can do to help you a little bit more is you can check your portfolio less often, so you don't need to be in there every day. You can review it monthly, quarterly, and I promise you, if you do that, you'll make calmer, smarter, better decisions on your money just by not being in a market every day trying to chase and just sticking to your plan. So if you don't have one, formulate a plan. If you need help with that, we can definitely help with that. But make sure you have a plan, stick to it, and just be patient, and that your portfolio is going to grow over time. That brings us to mistake number 4, trying to time the market. So this is a dangerous habit and it never seems to go away, trying to time the market. I know everyone wants to do it, right? Investors think that you can buy at the top and you can sell and wait when everything crashes and sell and then buy back again at the bottom. But let's be honest, nobody really does that consistently. You might hit that every once in a while. You might, get into a rhythm where you feel like you can time the market. But over years of investing, if you've been in the market for a long time, you know that's pretty impossible to do. You don't know what the news is going to be the next day. You don't know what's coming down the pipe, so you don't know what's going to drive the market forward or pull it back. So instead of trying to time the market, where even the pros get that wrong, and really think about this: if you miss just the 10 best days of the market, your long-term returns can drop by more than half. So there's certain days in the market where things run. We saw a couple of big runs when Palantir recently ran pretty good. Oracle ran. We've seen AMD run. So there's been some pretty historic runs. And if you missed those, if you were holding and you got out because you were trying to time it, you would have missed those runs. And those things happen with most companies. They don't just kind of steadily grow over time like they do, but they sometimes have those big jumps. And if you miss those big jumps, like I said, you can miss over half your returns on a year from trying to time it. So here's something that you can do to kind of avoid that. Always remember, it's not about time in the market. It's more about time in the market. So the longer you stay in, the longer you have your plan, like I talked about before, your wealth is going to compound and your money's going to grow. So figure out that plan, stick with it, and stop trying to time the market. And on to number 5, the one I said would probably be the one that loses you the most money over time. And this is losing your emotional discipline. So this one might be the most dangerous because it's the one that's going to keep you from making good decisions. You're letting your emotions take over. It's going to make you do things that you normally wouldn't do. So it's not about charts. It's not about the data. It's about your psychology, right? And the biggest mistake investors make in 2025 is losing that emotional discipline. So they get FOMO when a stock jumps 20%. We talked about some of those big jumps that some of those companies had, and people see that and they want to jump in, and you've jumped in at the height, and now you're the one holding the bag when it starts to pull back. Also, people panic when things drop. Say a company that you own drops 30%, and now all of a sudden your emotions are going crazy and you want to go ahead and sell everything. And these emotional swings can really hurt your investments overall, right? It can hurt your ability to grow. So how do we fix it? One of the things we want to do is we want to build a system so that we're trading based on the data, we're trading based on our plans, and we're not trading or investing on our feelings. So we want to automate our contributions. We talk about this all the time. You should have a monthly deposit going into your portfolio from your money, right? Your income. And that's going to help you with growing your wealth. You have to take the money that you're earning right now, whether, in your job, you own a business, whatever you're doing to make income, a portion of that income should be funding your wealth, right? So we should be building wealth, and you want to do that automatically, right? Just automatically put that towards building your wealth in your portfolio. You want to set target allocations, right? So we want to target what we want to do with our money, whether we're, buying at certain times of the month, whether we're buying at certain entry points that we've laid out for ourselves. Whatever your plan is, you want to follow those plans. And then we want to rebalance once a year, right? So over a year of trading and investing, things can get out of whack. We want to make sure we look at our portfolio, we realign it, rebalance it, make sure that it's fitting our goals, and we have money where we want it. And remember that investing isn't about being right every time. So there's going to be times where you're not right. There's going to be times you like a company, things that seem like they're going well. They may have changes in upper management. A product may go south, or something just may happen in the market overall. or something may happen exterior to the market, right? Something could go on that's outside of the market that could drop it. It's all about staying consistent over time. So even when those things happen, you want to stay consistent. You had a plan, you keep researching companies, you keep finding out more information, and you keep following that plan. That's going to help you over time. And every decision you make should serve your long-term goals, right? It shouldn't serve your short-term emotion. So that's what you want to think about. So that's what we have. That's the top 5 biggest mistakes of 2025. Again, chasing hype instead of value, ignoring cash, reacting to headlines, trying to time the market, and letting our emotions take over. So if you learned something today, go ahead and hit that like button. Also in the comments, tell me some of the mistakes you've made or some of the mistakes you've seen this year. And if you're really serious about leveling up your investing game and taking it to the next level, go ahead and check out the link in the description. It's going to have a link to our link tree. That's going to give you everything that we have there. We got some Udemy courses that break down long-term investing as well as cover calls. We also do a full coaching program. So there's a link there where you can set up a call to talk to us. We can go over what your goals are, but we'd love to hear from you. So any comments you have, put them down below, and we'll check on you. See you on the next one. Have a good one.